China's real estate market is falling apart as things have quickly taken another turn for the worse. Evergrande, which was at one time China's largest property developer, has officially filed for bankruptcy and defaulted on its massive $340 billion pile of debt. The sheer size of Evergrande's debts and failure has left many experts worried that China's economy might be having a Lehman moment right now that could introduce broad contagion into the global economy. It's undeniable at this point that the carnage in the Chinese real estate market is widespread. Data has shown that new home sales for China's top property developers have dropped 33% compared to just 1 year ago. And property prices are taking a major plunge as well. While China's official statistics are reporting that housing prices have only seen a modest decline, the reality is much darker. Property agents and private data providers show that China's government is significantly underestimating just how bad things actually are in the property market. Existing home prices are estimated to have fallen by at least 15% in major cities like Shanghai and Shenzhen, and at least 25% in Hangzhou, where Alibaba is headquartered. Analysts say the official Chinese data is not reflecting the reality of these sharp property declines because it relies on survey data as opposed to data from actual recent housing transactions. This widespread downturn in the property market has impacted tons of property developers and brought them to the brink of failure. While Evergrande has been the big name poster child that most people have heard about, they are far from the only property developer that's falling apart. The major Chinese property developer Country Garden also just missed bond payments this month on its $194 billion pile of debt and warned its investors that it expects to lose $7.6 billion for the first half of the year alone. So why is all of this such a big deal, you might be wondering? Well, it's because for years, China's property market has been arguably the primary engine driving the Chinese economic growth story. The property market alone accounts for roughly 30% of China's annual total GDP, and approximately 2/3 of the household wealth of Chinese citizens is tied to real estate ownership. And the reason the property market became this dominant force in China's economy is because of China's rapid urbanization. As China's economy and citizens transitioned away from rural farming to doing manufacturing work in cities, hundreds of millions of citizens were moving from the country into cities for work, and they needed housing in the form of homes and apartments. Evergrande and other property developers quickly jumped on this demand boom for housing in the market and began developing properties at a large scale. And in order to scale up and develop more properties, they borrowed money. A lot of money. Evergrande and other property developers took on massive amounts of debt and leverage to finance their operations, and for a while the Chinese government was okay with it because it was also benefiting them. Since China's communist government is the one that actually owns the land in China, local governments are the ones who sell leasing rights to property developers so they can then build housing. Selling these development rights to property developers is one of the local government's primary sources of income. So letting these companies take on extreme levels of debt in order to develop more and more properties benefited the Chinese government for a while, since a significant portion of this borrowed money ended up directly in the government's pockets for the leasing rights. In addition, all of this construction work helped boost the overall growth of China's economy and GDP on paper. So no one in power really wanted to stop the property developers out of control borrowing, since it was so lucrative for everyone involved. But you might be seeing a major problem here. This obviously was not a sustainable business model for many reasons, and was creating a massive bubble in the property market. The biggest reason is the fact that any downturn in the housing market would put Chinese property development companies under significant financial stress, as lowered sales would put them at risk of not being able to make payments on their massive mountains of debt. The only way their business model could continue to work is if home sales never slowed down, which is both a dangerous and unrealistic business assumption. Another major problem is that China's population officially declined in 2022 for the first time in decades, as the aftermath of China's draconian and short-sighted one-child policy has done permanent damage to the country's demographics and health. And this trend of population decline is only expected to get worse, with birth rates continuing to plummet in the country. The obvious implication of this population decline is that it will limit the need for future housing and property development, which does not bode well for Chinese property developers or the Chinese economy at large. And the final nail in the coffin for the sustainability of Evergrande and the rest of China's property development sector is that they've already built far more housing than what's actually needed. In fact, China has many massive city construction projects that have been completed, yet almost no one lives in them. This widespread phenomenon of massive empty developments in China has been referred to as ghost cities. And ghost cities are another major factor that puts China's focus on debt-funded infrastructure and property development even more at risk. These property developers have built many projects that remain unsold and are just sitting there as unprofitable infrastructure that are generating no cash for the property developers and provide no value to China. It's estimated that China has about 30 million unsold properties, which could house 80 million people. To put that into perspective, that's nearly the entire population of Germany. And on top of that, there's likely 100 million properties that have been bought but are not occupied. And there's a strong chance that many of these ghost cities might remain uninhabited as long-term population decline in China starts to take hold. Realizing that the real estate bubble was beginning to spiral out of control, the Chinese Communist Party intervened in 2020 to address the out-of-control debt that property developers were taking on by introducing what's called the Three Red Lines policy. This policy essentially cut indebted property developers like Evergrande off from borrowing more money unless they were able to meet the following three financial health conditions. The first was that their liabilities could not exceed 70% of their assets. The second was that their net debt could not be greater than 100% of their equity. And finally, the third requirement was that their cash reserves must be at least 100% of their short-term debt. If a property developer was unable to meet these conditions, they would have restrictions placed on their ability to borrow more money. But the Three Red Lines policy in many ways was too little, too late, as these property developers already were well in over their heads with massive debts. So the Three Red Lines policy ended up essentially tipping companies like Evergrande over the edge into default by cutting off their access to funding during COVID when home sales were already crashing. The combined loss of funding and decreased sales was the perfect 1-2 punch that began to push these companies towards failure. The Chinese Communist Party has since indicated that it may be trying to backtrack on some of the Three Red Lines restrictions in order to prevent further collapse of the housing market. But a lot of the damage might already be done, with massive companies like Evergrande and Country Garden already defaulting on their debts. And the sad truth is that property developers defaulting on their debts won't be just affecting investors. It will unfortunately be hitting average Chinese citizens hard. And that's because China's property market is structured in a way that's incredibly Ponzi-like. China uses a pre-sale system in its housing market. This is the practice where property developers sell homes before they are actually built. Pre-sale exists in other countries as well. But unlike other countries where only a down payment is required, China requires buyers to pay the entire amount for the home up front through a combination of loans and down payment. And worst of all, in China, the money from the pre-sale home purchase gets paid directly to the property developers before the developer has even broken ground on the building. This means that all of that money goes straight into the property developers' pockets for their immediate use, unlike in other countries where the money would be required to be held in an escrow account held by a third party until the developer actually finishes the home. This means that Chinese property developers are then able to take the money they were paid from the pre-sale home purchase and use that money to pay the company's existing debts and costs. And since Evergrande has over $300 billion in debt that they have to pay interest on, and over 100,000 employees that they have to pay, they've been using a lot of the new money from home purchases to pay their existing debts and costs, as opposed to paying for the actual construction. This has led to many pre-sale homes that are now half-built and unfinished, since property developers have run out of money to actually finish the construction. Which means the Chinese citizens that bought these homes are now stuck paying mortgages to the bank for a house that may never be completed. As you can imagine, this has caused massive social unrest in China, as homebuyers that have unfinished homes have even begun to organize protests and a mortgage boycott until construction on their properties resumes. In addition, since real estate is the preferred investment vehicle for Chinese citizens, with approximately 2/3 of Chinese household wealth tied to real estate ownership, The downturn in housing prices has created a situation where Chinese citizens are seeing their net worth fall significantly, which has created intense economic pessimism and led to weak consumer spending. It's rare to see organized protests in China, and major social unrest poses a threat to the Chinese government. So the housing crisis is being closely monitored by the Chinese government as it tries to fix its floundering economy. But unfortunately for the CCP, the debt situation of the property development sector might already be unmanageable. And with hundreds and hundreds of billions of dollars of debt, it's hard to know just how these defaults will impact the global economy at large and what contagion it could introduce into the system, potentially making this a Lehman moment for China's economy. But be sure to let me know your thoughts on Evergrande and China's property crisis in the comments below. And be sure to subscribe to the channel for more finance content. Thanks.